Have you ever noticed that the way you pay for transactions has significantly changed over time? A few decades ago, people made payments using cash, and later it was replaced largely by credit or debit cards. But recently, payment cards have stolen a place in everyone's wallet, and the specialty of all these payment cards is they're not issued by electronic card giants like Visa or MasterCard. Instead, tech giants like Uber, Apple, SupperApp, etc. have issued these cards. On the other hand, cashless payment services introduced by big tech giants or other startups other than traditional financial companies have become more popular within the last decade. So, does that mean that tech giants are now becoming banks? Yes, something is happening in the financial sector. So let's discuss the matter in detail. Before we proceed, hit the subscribe button and smash the bell icon for more exciting updates. A report published by American Banker in 2014 pointed out that the banking sector still depends on the banking methods which were adopted decades ago. So this traditional banking sector hasn't shown much improvement, and big tech giants have utilized this weakness as a new opportunity. They have grabbed many opportunities all around the world, becoming a huge threat to the existence of traditional banking and financial companies. So you may wonder why these traditional banking and financing companies are not moving forward with rapidly growing technologies. Actually, why? One key barrier for the banking companies to adopt the latest innovations is the COBOL language, which is used in their computer-based operational activities. Known by the abbreviation COBOL, Common Business-Oriented Language is the programming language used primarily for business, financial, and administrative systems. This language is not as handy as it was 60 years back, and most developers have no ability to deal with this outdated coding system. One could argue that companies can shift into a new programming language to solve this issue, but the problem here is that transforming their centuries or decades-long transaction histories into a new programming language is expensive work, so banks don't have enough money to do it. That's why we experience a delay, even in online transactions or ATM transactions. All these negative points have opened the door for neobanks or challenger banks to traditional banks. As they run on faster and lighter programming languages, they have the ability to attract more users despite the absence of physical branches or long financial history. What are neobanks? Neobanks, or challenger banks, are simply fintech firms that offer virtual tools like apps, software, and other technologies to carry out mobile and online banking without any physical existence as a bank. The term neobank is more commonly used in the United States, while the United Kingdom uses the term challenger bank. The emergence of these types of fintech firms was first observed during the 2007 to 2009 financial crisis. These neobanks don't usually provide all the services provided by a traditional bank, and they're specialized in providing particular financial products like checking and savings accounts. However, some of these neobanks are attached to traditional banks to ensure their financial products. The involvement of the big tech firms with these fintech companies has boosted the number of users who get the service of these neobanks. Moves of big tech firms toward their own financial systems. One of the leading online trading platforms, Alibaba, opened a partnership with Kabbage, which offers loans to small businesses on Alibaba's platform. This partnership offered loans up to $150,000, and it is known as the Pay Later program. As a fintech company, they didn't have enough financial strength, so they partnered with Celtic Bank to raise the funds. Now you might ask why Celtic would involve themselves with the Alibaba platform to offer this service. Celtic cannot skip the service of Kabbage as they are specialized in handling big data with the help of machine learning and artificial intelligence to determine the eligible business to offer loans. As we mentioned earlier, neobanks are specialized only in one service. In this case, it's offering loans. With the involvement of Kabbage, Alibaba offers banking services within its platform to maximize the number of sales, and as a result, it has boosted their profits as well. However, this is not the first time Alibaba made an attempt to establish its own financial system in order to become free from barriers caused by the traditional banking systems. The majority of the Chinese sellers on the Alibaba platform had no credit or debit card facilities in the beginning. So they introduced Alipay as a method to receive payments for sellers within the platform. This was further improved with the establishment of Ant Financial back in 2014 to support the financial infrastructure. So many sellers and buyers within the platform prefer to use the service of this built-in financial service than using the traditional banking systems. According to the report issued in 2017, Ant processed transactions worth $8 million within that year. That's 10% of the world's total GDP and about 3 times the size of the UK's GDP. You can imagine how these built-in financial services within big tech platforms are a huge threat to traditional banking and financial services. Even though Ant Financial is very young, it's worth 50% more than the Goldman Sachs financial service that was established 150 years ago. Presently, Ant is offering other financial services like assets management, loans, insurance, and credit profiling with the involvement of third-party apps as well. Apple is one of the leading tech giants which has recently offered different types of banking services to their users. They've invested $150 million in the past year to acquire the ownership of Credit Kudos, which is a UK-based open banking startup that helps banks and lenders to make better decisions. FinTech Management defined their app as Challenger Credit Bureau, which securely analyzes banking data to make more accurate and fairer credit assessments. Even though it's been acquired by Apple, their plan with Credit Kudos is not clear yet, and most experts explain that this is a part of a trend where big tech companies threaten to replace traditional banks. But this is not the first time such an acquisition was made by Apple Inc. They paid $100 million to acquire the Canadian startup MobiWave to launch their tap-to-pay feature. So, they included that feature within all their iPhone models, which were released after the iPhone XS. With the introduction of this tap-to-pay feature, Apple users were able to perform contactless payments using NFC technology with no additional software. Thus, Apple was successful in transitioning their users to a cashless payment method without any involvement of the traditional banking system. This was a huge boost to the US tech giant's Apple Pay service, which is accepted by more than 90% of retailers within America. All these developments moved their users from the traditional bank system, raising a big question about their future. Being the owner of the Android platform, Google, or Alphabet Inc., is another tech giant which focuses heavily on it. Even though Apple Inc. abandoned its banking plan to focus on cloud business, they are still focusing on attracting customers for their financial services, which are based on their cloud platform. That means that they are now working on the development of the financial sector by dividing it into 4 areas as payments, money management, product comparisons, and financial advice. By combining these into a hub, they're trying to create an alternative to traditional banking with different platforms of Alphabet Inc. Talking about Google's attempt to develop a strong financial service, Olivia Burdock, an analyst at Forrester, says, developing a better global payment network, popularizing mobile payments, or providing affordable financial advice that millions of customers desperately need are all challenges that are yet to be met. With its army of talented software engineers, experience building global search and advertising networks, and a strong commitment to innovation, Google could just be the firm to tackle them, she said further. Google's first attempt to introduce a mobile payment system, Google Wallet, which was introduced back in 2011, struggled to a considerable extent. However, it didn't give up on its attempt to introduce a financial system within its own platform and still introduced more innovative things to build a more successful digital wallet that can be used for any kind of transaction other than in-store payment. We are updating our approach to focus mainly on delivering digital enablement for banks and other financial service providers instead of us serving as the provider of these services, said a Google spokesperson about their plans to improve their built-in financial services. Some of the biggest social media platforms like Facebook, Instagram, and WhatsApp, which came under the ownership of Meta Inc., have developed their own financial system called MetaPay to shop, donate, and send money across Meta technologies or to make purchases using the MetaPay button. This was formerly known as Facebook Pay, and with the rebranding of the Facebook company as Meta, it also changed its identity to MetaPay to widen the service as a cross-platform payment service. This service is totally free, and that's why more and more users are attracted towards MetaPay, as it adds simplicity to any transaction other than using traditional payment methods. The future of traditional banking and financial services. Now, the world is simply transforming into a more virtual place, and society is adapting to offer every one of their services via the internet. So they want easy, simple, and fast transaction methods to fulfill their financial services more easily. So big tech firms identified these necessities many years ago and came up with more attractive built-in payment methods that suit the present world. As a result, customers have moved away from the weaker and less user-friendly traditional banking and financial systems and towards the financial services introduced by these big tech firms. Following recent trends, we can assume that a few big tech firms will handle everything in the near future. As an example, our communication sector is totally owned by Android or Apple, and they have the ability to handle a big part of life for everyone in the present world. So, in the future, they will have stronger and more securely built-in financial systems within those platforms that can move users completely away from the traditional banking and financial systems, putting them at a bigger risk. We are not attached to big tech firms or traditional banking systems. We simply need a service to fulfill our services more conveniently. So the system which shows more adaptability will survive in the future, and that's the only thing that we can be sure of. What do you think about this recent move of big tech companies to becoming banks? Share your thoughts in the comment section below. Thank you very much for watching the video. If you enjoyed the video, subscribe to the channel to get more exciting news like this. See you guys in the next video. Goodbye.